Hi everyone. Hi everyone, welcome back to my YouTube channel. It is 2026, like where did the last 12 months go? Now in today's video, I'm going to be breaking it back down to basics on how you could buy a house in this year coming up. My name's Sam Fox, I'm a mortgage expert from the UK, and do yourself a favor, hit like and subscribe. We're going to be uploading videos every single Monday to make sure you're better equipped on how to get from A to B when it comes to buying a home. So we're going to go through a quick fire step-by-step process on how you can get there. And I'm going to start with find a broker. That's right. Talk to somebody you know, like, and trust. Find the right broker that's going to help you get from A to B. Now, I'm not talking about a broker that's just going to go out there and get you the best interest rate and tell you, yeah, let's bang it with NatWest and hopefully it gets somewhere. I'm talking about a mortgage broker who genuinely cares about you and your journey. Somebody that can help coach you through savings accounts, deposits, the best lender, best interest rates, the best protection, and give you some hints and tips on how to budget when you first purchase your home. At the end of the day, if you do really need somebody to do that for you, all you've got to do is drop me a message. So the second thing is get all your documentation in order. Nice and easy, get it sorted now, breeze through the application process. So firstly, proof of identity. Easiest thing you can get, driver's license or passport. Or if you have one, go and get yourself a shotgun license, but not many people have them these days. Second of all, proof of residency. So most commonly, bank statement, utility bill is usually pretty fine to use that sort of thing. National insurance number, I don't know mine, but it's on a payslip. Make sure you go to the top right-hand side of your payslip, usually, get that written down and pass it to your broker if need be. The proof of income is going to be at least 3 months' wage slips that are going to be required along with proof of additional income. So maybe your P60 is needed, but your latest 3 pay slips will show overtime, bonuses, commission, that kind of thing. If you're self-employed, then we say your latest 2 years HMRC tax calculations and overviews. If you're a limited company, it might be worth having your latest set of finalised accounts as well. Because with self-employed, there are a few different ways that you can assess your income, and we've got videos on self-employed mortgages. We'll link it in the comments below. The next thing on my list would be proof of deposit. Now, your proof of deposit just shows to a bank where your money's come from and how it's been built up. So have your bank account ready. If it's a gift, let's say it's parents, ask for their latest bank statement, and they might have to sign a gift form to make sure that there's nothing that needs to be repaid. I'd have a list of all your current debts. I'd keep a list of all your current creditors, outstanding payments, and your balances. Your credit report would be really handy here. Then I'd also have any government income award notices such as child benefit or universal credit, although some lenders will accept bank statements, so maybe get 3 to 6 months worth available. In terms of bank statements, you should also already have 3 to 6 months available anyway, and this should correspond with your payslip to make sure we can see what's gone out of your account and what income has been received. So once we've got your mortgage broker sorted and we've got all your documentation, it's time to move to the research process, where we get what's called an agreement in principle, or mortgage in principle, or mortgage promise, or decision in principle. I'm sure there will be more names for it, but essentially, the theory behind this is that a lender will carry out an initial soft credit check, make sure your creditworthiness is fine, and based on the information we tell them of your income and expenditure, based on your credit file, they'll spit out a figure that'll say you can lend, in principle, £300,000 subject to application and evaluation on the property. Now, the reason that you need this is because if you're going to go and view a property and make an offer, the estate agent's going to go, all right, mate, well, have you been credit checked by a bank? And if you haven't, they're probably not going to take you as serious. So if you go to an estate agent and say, I've been pre-approved with my lender for £300,000, they go, oh, actually, it's true, it's been passed, we'll put your offer forward. So as a first-time buyer, it puts you in good standing if you have an agreement in principle ready for when you start viewing properties. Now, once we've completed that stage, the next bit is the fun part, finding the property and putting in the offer. So that's when you can go into all your portals like Rightmove, Zoopla, Prime Location. There's probably more, even social media now, people are trying to sell houses on there. But that's where you can look at properties in your price bracket, go out during the week or on a weekend, viewing the houses, get to understand the areas you want to live in, and put that formal offer forward. Now, once the offer has been accepted, then you'll need to inform your mortgage broker or your bank or building society that you're going to go ahead and finalise that application. So once we've got the agreed purchase price, let's say it's £200,000, your mortgage broker then goes back a step with updated information from you to then research your lenders. Now, going back to the agreement in principle stage, what I do say to first-time buyers is, today it might be with somebody like NatWest, but in 30 days' time, the best lender and products for your situation might be Santander, or it might be Nationwide or Accord, or whoever we decide to go with. So what you might have today might change in the future. So just bear that in mind. It's not always going to be the same lender you have the AIP for, but sometimes it is. And it's at this stage where your mortgage broker will go through the mortgage term, the interest rates, and the products that are available to you. Now remember, the shorter the mortgage term, the higher the monthly repayment will be, but the less interest you're going to pay over, say, 25 years. But the longer the mortgage term might mean a slightly lower mortgage payment, but you're going to be paying interest for an extra 5, 10, maybe 15 years. So give it some careful consideration. Look at your monthly budget in terms of everything. So your mortgage and all your relative insurances to protect you and the family in the home, and make sure we're working back to that. And you've also got the option to overpay with most mortgage lenders this day and age. So the next stage after this is to appoint your solicitor. Now they're going to start the conveyance and work for all the legal side of buying and selling a property. Now we've done a video going into detail on this. So again, we'll leave this below here linked so you could go ahead and do a deep dive into all of that. But we'll go into that shortly, and they're going to go into all your property searches for the land, for the title deeds, who owns it, and help you negotiate all the finer details of buying that actual house. Now, having said that, the traditional way of buying a house here in England and Wales might be up for review this year, which makes it even easier for you to buy a home. Now, it's worth noting that traditionally, your solicitor will carry out all the searches and it take a couple of weeks, but with the housing reforms potentially on the way, that might be available for you, which means that the house buying process might go from like 6 months all the way down to 6 weeks, which would be a welcomed addition to the housing market. So we've appointed the solicitor. We, as the mortgage broker, can then get on and submit your application to your lender. Now we'll go through the underwriting process with them. We'll submit all what we call day one docs. So it'll be your payslips, bank statements, proof of deposit, whatever they're going to ask us to help the underwriting process. Now the term underwriting is the process of evaluating risks so that banks and building societies can reduce the risk when making financial decisions in various situations. So a mortgage lender carries out this process to make sure that you are creditworthy and your information stacks up, and essentially you're going to be a safe bet. If you're going to go and walk into a bank and say, yeah, lend us 250 grand, mate, they go, yeah, no worries, we're not going to do any checks. But what they are doing is they're going to do stringent checks in the background. They're going to have a look at all the data that they've got for the, 100 years of being a lender to make sure that statistically and comfortably you're going to repay that loan now and in the future, because ultimately if you don't, it's going to lead to a repossession order. So caveat, you always need to make sure your payments are kept up to date. Then at this stage, you might want to consider surveys on the property. Now a survey is not always required, but it can be advised. So this means when you're buying a house that may be 100 years old, and the windows might need replacing, it's a bit cold, it smells a little like damp inside, a full survey, like a home buyer's report or structural survey, will go in depth. It might be 100 pages long, and it'll tell you everything about the property, how long things have been there, when you might need to replace them, and the potential costs. So it's worth considering. If it's a brand new build, you might think, nah, I don't really need to do it, but it's down to you to make sure you've got those provisions in place and you're 100% sure you're buying the house that you want to. Now, I'm making it all sound cupcakes and roses here and like it's going to take 5 minutes, but reality is it might take a little bit longer than that. Now, one of the final steps is exchange. Now, this is where your solicitor and the other solicitor get ready to exchange the contract, so you become the legally binding owner of the property. It can happen the same day. Sometimes exchange might happen on a Thursday, completion happen on a Friday, but essentially the solicitor is drawing down the funds from your lender, collecting all the money, exchanging contracts, sending the money this side, collecting your deposit, all that kind of thing is going to happen pretty quick. So when you get into that end of that process, you're going to be getting ready to get the keys, so make sure you've got everything ready and prepared for your purchase. Home removal vans, if you're going to go and buy a sofa, make sure you've already measured up or got some ideas of where you're going to go with it. Get the paint ready, get the carpets ready. That's when it's going to be all systems go. Now, I've made that sound overly simplified and very straightforward, and at times it can be, but it can also be quite challenging. And if there's anything I can help you with along the way, please drop me a comment below or email me at sam@ukmc.co.uk. I'll see you next time.